Good morning, students. This video I'm going to explain about introduction and introduction of audit and assurance, preconditions for an audit, and engagement letter. In this, next, first we have to see what is the audit and assurance. So, audit planning, what is the audit planning? Helps the auditor obtain the sufficient appropriate evidence, supportive documents for the circumstances, helps keep audit costs at a reasonable level and helps avoid misunderstanding with the client. See, here what they are going to explain. First, auditors, they have to plan accordingly to verify the books of accounts. How they will verify, what are the books is important, what a cash book is important, income and expenditure book is important, and financial statement is important. And any other miscellaneous expenses, any purchases, any fixed assets, any current assets. So all those things they have to plan accordingly. Then they have to verify the books of accounts. So ISA 300 planning and audit of financial statements requires that the planning stage of the audit should be used to establish an overall strategy for the audit, develop an audit plan, and reduce the audit risk. So why they are going to planning before itself? They have to reduce the audit risk. Any misrepresentation or misunderstanding or misstatement has to be not involved in the financial statement. For that purpose, they have to reduce the low level of audit risk might be there. So they have to reduce the audit risk and verification of books of accounts in the proper manner. So the standard also requires that auditors should plan the audit work so that the engagement is performed in an effective manner. So efficient manner and effective manner. It is an important clarify what are meant by the terms of overall audit strategy, planning, and audit plan as per the ISA 300. They are explaining about the audit plan. So auditor, what are the things they have to verify the books of accounts? First itself they have to plan. So carried out the audit plan details the specific procedures to be carried out to implement the strategy and complete the audit. So what are the preconditions should be needed for an audit? So auditors should only accept a new audit engagement or continue an existing audit engagement if the preconditions for an audit required by ISA 210 agreeing the terms of audit engagement are present. Suppose if they are auditors, they are verifying the books of account in the current assessment year financial statements. So by the time if it is required in the previous year or any other last 2 years, 3 years statements is required, they have to verify. Otherwise it's not required if it is anything doubt arise or any important details is needed. So by the time they have to verify the books of accounts, the existing file also. And ISA 210 requires the auditor to determine whether the financial reporting framework to be applied in the preparation of the financial statement is acceptable. So the first they have to verify. See why they are auditor, they are coming and verifying the books of accounts whether it is true and fair view of statement or not. So if it is financial statement, they are verifying the financial statement. In that report, framework should be applied in the preparation of financial statement assess whether it is acceptable or not. Obtain the agreement of in management that it acknowledges and understand the responsibilities of the following. What are the things is required? Preparing the financial statement in accordance with the applicable financial reporting framework. So financial reporting framework, they have to auditor has to prepare the financial framework. So they're needed for financial statement. Internal control necessary for the preparation of financial statements to be free from material misstatements. So any fraud and error, it should not be there, or otherwise minimize the risk. They have to see the internal control system. They have to introduce the internal control system also. Providing the auditor with access to information relevant for the audit and access to staff within entity to obtain the audit evidence. So the audit evidence is important. Whatever maybe they are verifying the books of accounts, they want supportive documents. They want some audit evidence. So to prove, so whatever the expenses happens, or purchase of assets, or disposal of assets, any events of business events it happens, they need supportive documents. Response if preconditions are not present. Suppose if the preconditions for an audit are not present, the auditor shall discuss the matter with the management definitely. So first of all, they have to write the preconditions. These are all the documents is not there. So you have to produce, these supportive documents are not there. So you have to produce according to the timely, you have to produce before writing the audit report. Suppose if they are not preconditions are not there, or response if it is not responding, the employer or the client, they are not responding, then auditor must and should, they have to discuss with the concerned with the management. The auditor should explain what the preconditions are that they are required to order to comply with the ISA 210, agreeing the terms of audit engagements. So the auditor should also explain that one of the purposes of the preconditions and agreeing the terms of the audit engagement in general is to avoid misunderstanding about the respective responsibilities of management and the auditor. So that is the auditor is responsible to discuss with the management priorly if their preconditions are not present. So for that some procedures are also is there. So if offered an audit role, the auditor should follow some procedures. Ask the client permission to contact the outgoing auditor. Reject role if client refuses. So contact the outgoing auditor asking for any reasons why they should not accept appointment. If any reply is not received, see, not only financial statements, related financial statement, whatever they need, whatever they details is required, they had to ask the client, they had to answer also. So for example, in the even telephone also is okay, but the conversation and discussion is important for client and auditor. If a reply is still not received, the prospective auditor may still choose to accept, must proceed with the care. So another procedures also is there. Ensure that legal requirements is required, and whether the work is suitably is a low risk things or not, or any problems arise, what we had to do, and access the integrity of the company's directors. That is important. That is one of the main character of the directors. Carry out the checks ensures the firm can be independent to competent to do the audit, has the necessary resources. So these are all the important points are there in the procedures, preconditions for procedure for an audit. Are not preconditions are not there, then what are the rules and regulations? It has to discuss with the management. Last topic in this video is engagement letter. What is the engagement letter? It specifies the nature of the contract between the audit firm. So it is purposes to minimize the risk. See, auditor always they had to prepare the report for the purpose of mainly the minimizing the risk and misunderstanding between the auditor and client. They have to avoid the misunderstanding and auditor and client. Confirm acceptance of the engagement. Set out the terms and conditions, whatever the terms and conditions with the client and auditor, they have to be proper. What are the contents should be there in the engagement letter? Important contents I have given here. So just you see the objective of the audit of financial statement. That is the main purpose, to verify the books of accounts, to verify the financial statements, to know the financial position of the organization. For that purpose, auditor has to appoint that company. So first objective of the auditors for the financial statement, to verify the books of financial statement. Management responsibility for the financial statement as described the ISA 200. So the financial reporting framework adopted management preparing the final statements. Applicable financial reporting framework. So why they are examining the books of accounts? They have to verify the books of accounts, then they have to prepare the audit report. So the audit framework, for that purpose, they are required to examine the verification of books of accounts or financial statements. The form of any reports, other communication results of the engagement. So the engagement letter should be whatever the content should be needed, means these are all the things. First, financial statements, that is the main objective, and what are the management responsibility has to be there in the ISA according to the ISA 200. Then financial reporting framework adopted, whatever the adopted the management preparing the financial statement. Then scope of the audit, including references, application, legislation, regulations, pronouncements of professional bodies of which auditor adheres. So these are all the content should be there. And then again they have to see the unrestricted access, whether the records, documentation, supportive documents or any other internal control system is there, means they have to, there is an unavoidable risk is there, they have to how to handle this material misstatement to remain undiscovered. So these are all the problems, any problems arise in the engagement letter will help auditor and as well as the client also. So management's responsibility for establishing and maintaining the effective internal control system. So internal control system, how much effectively is running in the organization, that much they will avoid the risk also. So they will reduce the risk, they will minimize the risk if they are having good internal control system. Thank you.